For the Wall Street Exclusive, I'm Joe Springer, helping you make informed decisions so you can succeed in the market. I want to talk about price to earnings ratios and why they're sort of like age. PE multiples are sort of like the age. So if 40 is the new 30 because people are living longer and they're taking longer to get educated and become adults, and with health and medical advances, you can be spry for decades. Okay, so if 40 is the new 30 in age, maybe 30 is the new 20 in price to earnings multiples. Okay, so a PE multiple of 20 kind of used to be considered pricey. The average stock used to have a price to earnings multiple around 15. Right now, the average stock has a price to earnings multiple almost to 20. Okay, and so the idea here is that Ben Graham's days are over. Ben Graham wrote the very, very famous book, The Intelligent Investor. It was all about buying bargains. And so, and that's what Warren Buffett used to do. And so take it from Ben Graham disciple Warren Buffett. The old Ben Graham has been replaced by the young and spry 91-year-old Charlie Munger. And so this is from Warren Buffett's most recent Berkshire letter that just came out. And he says, quote, "Most of my gains in those early years, though, came from investments in mediocre companies that traded at bargain prices. Ben Graham had taught me that technique and it worked. From my perspective, though, Charlie's most important architectural feat was the design of today's Berkshire. The blueprint he gave me was simple. Forget what you know about buying fair businesses at wonderful prices. Instead, buy wonderful businesses at fair prices." So there you have it. There's the end quote. So there you have it. There's the new value. Buying wonderful businesses at fair prices is the new value. So you're not, you know what, if you find a stock that's profitable and its PE is low, lots of good stocks like that, but that used to be the way to look for things. Now there's plenty of stocks with PEs in the 20 that are good buys. So lots of stocks with PEs in the 20s that do in fact represent the new value. Here are some. Hormel has a price to earnings ratio of 25. Meat and food distributor and processor, very well managed. They're going to keep compounding, making money. There's a great buy. Ecol, US Ecology, has a PE of 26. They deserve a premium. There's 20 hazardous waste facilities in America. They own 5. They're in the multi-bag portfolio, up more than 25% since we added them. Badger Meter, PE of 28. They do flow measurement, great tailwinds of water, the scarcity of water. Now utilities are measuring more, and natural gas as well. Carpenter Technology, PE of 21. Great time to buy that business. Kimberly-Clark, PE of 28. We talked about that in the last segment. Great business. Lowe's, Hershey, Republic each have PEs of 27. We've talked about each of those as well in the last segment. So those are all great businesses. Okay, so wonderful businesses at fair prices is the new value. Don't be afraid to buy something with a PE in the 20s. That's if it's a wonderful business and you have a long-term time horizon, that is a great strategy. Okay, I hope you found that helpful. I'm Joe Springer for the Wall Street Exclusive, helping you make informed decisions so you can succeed in the market. Coming up next, we have the new and improved Thunder Angle.